We have the jobs openings news and we have indecision in the markets for investors. And let's jump right to it. US job openings slide to a 14-month low. Hiring weak in November. You guys are getting weak job reports. This is November's data though. Let's keep going. Job openings slide to a second lowest level in 5 years as hiring remains sluggish. Looks like last time, 5 years ago, we had very small market crash. That was the recovery after the 2021. Let's keep going. You have the job openings data from BLS coming in right now, which was down by 185,000 over the year. But private payrolls rose 41,000 in December, slightly below expectations, ADP says. It's a little confusing, but essentially, you have job openings through the floor. You have private payrolls rose just a little bit. What does this mean? Your labor market is steadily slowing down. Hard to wrap your head around. It's just slowing down steadily. As your Australian dollar strengthens as US dollar struggles ahead of economic data. Ooh, you people in Australia are very strong about what's going on right now. Looks like you guys are saying, yes, take good risk, go for it. Hence, strong dollar. Now, this is a problem because the Australian dollar is saying everything is fine, take risk because their dollar amount is going up. As the US dollar is saying something might be wrong, be careful because our dollar is slightly down. It's a very risky situation to be in because we also have that unemployment rate and jobs coming out on Friday saying how our market's doing. If we get bad news, the Australian dollar will come down. Like it will snap down, most likely, only if the data on Friday is extremely bad. So, this just means that Australia is kind of just guessing, in a sense. Let's keep going by showing you the chart of the dollar. Here is your US dollar. We have the symbol DXY, daily time frame. You can see back in November, we popped over the 200-day moving average just a little bit. So we were going with gravity for just a little bit. While gravity was crashing down, so we didn't stay up there that long. You guys now have the dollar trying to come back up. We may make it over, we may not. Only time will tell. But if you do make it over and the dollar gains value, usually a sign of recession because people are hanging on to dollars now instead of outspending. And Japan's 10-year yield inches higher after moderately firm bond auction. Cool. Let me jump into the chart and break some stuff down for you. Here's your Japan 10-year yield. We have our current rate sitting at 2.116%. If you guys don't remember, even I barely remember, I think it was right over here where 2008 was, when right before the market had a little downturn. Now, we're way above that. So, hopefully the 10-year yield of Japan comes down a little bit. Also, for you guys who don't know, the yen carry trade, it was you have property in Japan, you could pull out a loan, you then take that money from said loan and buy a US Treasury bill, also known as a T bill, and you had like 5% at the time. And then as soon as that T bill expired, you would go ahead and keep whatever was left over after paying back the interest to the loan interest rate that you got at Japan. Thing is, the Japan interest rate usually sits at zero because Japan's really good at giving out debt. Now, some of you guys are wondering, the Federal Reserve, are we going to cut rates? We had an article come out earlier this year, some point late last year, I forget exactly when, but the Fed's saying we don't want to cut interest rates more than one cut for 2026. You guys are saying no change so far in the month of January. Yes. Forget we're in January, not December. It's a 92% chance. Let's go see what the chart says. Here's your 2-year yield. This is what the Fed follows. If you guys are new, you're welcome. Keep that advice. You have your current pattern being a descending triangle. It can usually breaks to the upside, but haven't seen anything yet. It's still inside of this pattern. It has yet to break either to the upside or the downside. Also, your Federal Reserve is right here. It's this orange line. If we don't cut rates and we stay neutral, it's just going to go flat across the screen. We will see January 27th what happens. I know most of you guys are probably curious about what's going on in oil regarding what's going on in Venezuela and what Mr. President's doing with all those fun toys he has in the military. Here's what I'm going to tell you. You see a spike in price in oil before the news reports something happens. That's why it's a really good idea to learn how to trade. Anyways, we have a descending triangle. It's a pattern that usually breaks to the upside. How long will it go? It can go all the way to the end of the pattern. It's not picky. We will only see in time where we will go. Now, oil is below the giant moving average. If it breaks up, it will most likely hit its head on the giant moving average and get possibly rejected. If it breaks above, retest, maybe go higher. Only time will tell. But your oil, just remember it spikes in military heavy operations before news says anything about that said military operation. And now some people are wondering, it was mostly yesterday, what about the market? The market hit all-time highs yesterday. Yes, your S&P 500 went up. Anyways, you guys are still in a pattern. I'm not going to say we're going in any direction. I'm just saying you're still in a pattern. No decisive direction yet. The news on Friday may be able to affect the market a little bit, but we will see. Here's your cues. As you can see, we're in a similar pattern to the S&P 500. You have your giant triangle. It's inside. Today it tried to break up out of it, but it's just made a giant wick. Giant wick just means indecision in trading. You have not much. It didn't move much today, but you did break up out of the pattern. Hopefully, it goes up again tomorrow and then comes back down the day after and then rips up to have confirmation that we will keep going up. And finally, your Dow Jones Industrial Average. Yes. For those of you that watched the previous video, I did say it was going to have a pullback. We'll explain it. You have head and shoulders pattern. You have your neckline here, breaks head neckline. You go down. You are above giant moving average, which means you have more support to the upside. You came down, hit about half of the price target. That's expected when you're going against gravity, and then it turned around and came back up. So, was I wrong? Not really, no, because I said pullback, and it did said pullback. Just not a big one like some of you were expecting. So, in summary, we have indecision in the markets. We have Australia looking like they're trading on emotions. And we are still waiting for the big news on Friday. Now, with all big said news, you guys have one thing you can try to do to try to survive all of this, which is to start a business. It can be sell knowledge that you have, do one on ones, charge the customer. You guys can even sell a course, or you can go outside and do more physical labor, do like wash trash cans, wash driveways, wash windows. Just start something. Thing is, where most of you get caught is consistency. You won't make the money right away. There is no get rich scheme. It's just you have to put in the hard work if you want to survive. Because your wages, it will not keep up to what's going on. And we'll see on Friday how much the job market is being affected. And I will see you guys Friday.